Let's find some day trades and swing trades. Hello, traders. It is Tuesday morning, August 4th. We are about 2.5 hours into trading. We've had a really quiet market today. We had a little end of month, beginning of month fun buying yesterday. You can see how we had that gap up Monday morning. Market was able to hold those gains and actually finish pretty close to the high. This morning we pulled back a little bit on the open. We've been trying to challenge that high of the day from Monday. Haven't quite been able to get through it. I don't know that we'll have the power to do so. We've got a couple of big economic numbers coming out tomorrow. We have ADP. That's a really good number that I like to track because they actually process payrolls for small and medium sized companies. So they have their finger on the pulse. We also have ISM services. 80% of the economic activity is tied to the services sector. So it's a very important number. The other reason I like ISM services is because it is forward looking. It is a survey. I think that the problem that we're going to run into is jobs. This morning we had British Petroleum report a $6.7 billion loss. Energy employs lots and lots of people, and these are high paying jobs also. If you look across all the different sectors, we've got weakness in restaurants. And yesterday I'd mentioned to you that according to a Bloomberg analyst, a third of the restaurants could go out of business in 2020. They account for 8% of the labor force in the United States. That's a huge number. Restaurants account for 4% of GDP. And you can go on sector by sector by sector. Finance. Banks are really struggling as well. They've got lots of bad loan write downs. They are in a 0% interest rate environment. They'll be hurting if jobs struggle. The coronavirus is taking much longer to resolve. It's reared its ugly head again. We've got states that are retreating back into phase 2 and phase 3. We've got some major cities actually considering shutting down. Schools are in limbo right now, so we don't really know what's going to be happening. That is being determined on a state by state basis. But if you look at all the different sectors, whether it's hotels, transportation, including airlines, these are some sectors that employ a lot of people, industrials, all very, very weak. And when you have 10 companies in the S&P 500 that are up 35% and the other 490 companies are down an average of 10% this year in terms of their stock valuations, that gives you an idea of how narrowly defined this market rally has been. And also from a jobs standpoint, it tells you there are not that many jobs in the tech sector. There are a lot, but there are many other sectors and groups that have a lot more employees. PPP is going to be coming out. You've got Democrats and Republicans haggling over a $1.5 trillion stimulus plan. That is nothing close to the $6 trillion plan that we had back in May. So right now it's super important that the virus is under control and that the economy has at least a chance to start gaining some traction. That's not happening right now. This is taking much longer than everyone had expected. I think that we're going to start to see some credit concerns. I think that once politicians get this new stimulus plan approved, they're going to disappear, they're going to go on recess, and the market's going to get nervous. We are post mega cap tech earnings. So while we're still waiting for the market to roll over, we can be in tech. That's the best sector. I'm going to put up the daily chart. We'll take a look at the S&P 500. There's the all-time high right there. It amazes me that we are this close to the all-time high. We are only about, I'd say probably less than 100 points. We're less than 100 S&P points away from the all-time high, and this comes after more than half of the S&P 500 has reported earnings. Revenues down on average about 8%, profits down over 30% on average. Very, very soft numbers. The expectation was that, hey, this recovery is going to be on track. By now, in August, we are going to be clicking at all cylinders. Q3 is going to be a big recovery month. I'm not seeing it. I am not seeing it. So I think that the upside reward is much smaller than the downside risk at this juncture. If you're a swing trader who cannot monitor the market right now, I suggest being in cash. I do not suggest shorting. We are in a 10-year bull market rally. And that means that you have to be very, very careful. There's our rally. You have to be very, very careful shorting this market. Even on a weekly basis, you can see that this big drop, it took only a month for that fall. But the recovery is currently taking about 4 months. So in here, you had large snapback rallies, very, very violent. If you're not able to watch the market intraday, your best bet is going to be just wait for the market pullback. Once it pulls back, we'll know what the speed and the volume was during that market pullback, and then we'll be able to gauge where our re-entry point is. Until then, just stay in cash. We've milked this thing for everything it's got. Yes, we might miss a little bit of upside. Yes, I might look a little bit stupid being in cash from a swing trading standpoint right now as the market continues to grind higher and doesn't show any signs of strain. But when that hurt comes, it comes so quickly that you cannot get out of your positions quick enough. If you're an option trader, the bid-ask spreads widen out, and then it's super, super difficult to exit trades. Be in cash. The market starts coming in. You'll be viewing everything very objectively, and you won't be panicking about losing positions that you have on. Even if you have 2 or 3 losing positions, they still take time to monitor and watch. So I like being on the sidelines here. Now, that doesn't mean that I'm not trading. I am trading. I am still day trading because I can watch the market during the day. So if I see something that really starts to set up well, of course I'm going to be taking some short positions. What exactly would I be looking for? I'm looking for late day weakness with follow through the next day. And I've been showing you this upward sloping trend line. This is also my gauge of when I'm going to start shorting. I'm going to click on that low there. I'm going to click on this low right here. There's my upward sloping trend line. It comes into play somewhere around the SPY 320 level currently. When we get that breakdown on a long red candle closing on its low and any kind of follow through, I'm going to start shorting. From a day trading standpoint, I'll be shorting intraday. I will be more aggressive with my sizing because I think that that momentum could start to really flow into the end of the month. So that's currently how I'm positioning myself. Because we don't have any signs of market weakness right now, I need to favor the upside. So I'm going to show you some swing trades. If you are a nimble trader who can watch the market intraday, you can hold some of these positions overnight. You certainly can day trade them on the long side. So I'm going to go into strong after earnings. So these companies have all reported in the last 2 weeks. They gapped higher and they're trading above that gap right now. It's a fantastic search to use. If I knock through this list, all I have to do is go through stock by stock. Beautiful breakout right there. Look at that continuation. This is Nokia. So these are all excellent candidates. There you got Verizon. Still needs to get through this horizontal resistance there. What I would do in this case, since that is a pretty major resistance level, I'm going to click GTC. I'm going to double click on that bar. Stock is above the 200-day moving average. I like that. If we can get through this resistance, I'd be more interested. But since I'm already looking at the chart, might as well drop that line. AMD off to the races. Look at that beautiful breakout there. Gap higher, earnings, gap higher. Didn't even spend any time digesting these gains. It just fueled higher today. This stock has a full head of steam. I really like AMD. Since we're on AMD, let's take a look at its counterpart, NVIDIA. We can hover over the E. NVIDIA announces on 8/19, so we still got about 2 weeks worth of time left. I love this compression right in here. I love this breakout through the compression to a new high. NVIDIA looks excellent. So yes, I think NVIDIA sets up well also. There you might be able to sell an out of the money bullish put spread, but make sure that it expires before the earnings announcement date. FEYE. This is actually a nice looking breakout here as well. You can see how that $15 support level is holding. That was the gap higher. It's been tested 1, 2, 3, 4 times now after the number. I think you can sell some out of the money $15 puts on FEYE. You might be able to go out 2 weeks or so, collect some decent premium. This stock to me, big volume, looks like it wants to continue to go higher. Again, earnings are out of the way. Here you've got AER. You have a downward sloping trend line right in here. that's just been breached. You have the 100-day moving average you can lean on. You also have this horizontal support right in here. So I think you can sell some bullish put spreads probably down on that $25 level very, very safely. That 100-day moving average is your first line of defense, and that horizontal support is your second line of defense, and we are above that downward sloping trend line. Do you see how easy this is? I have so many searches that I've created within Option Stalker, and in my manual, I outline what they are and when to use them. So really, really nice search. You don't have to go fumbling around looking for this information. It's right at your fingertips. Here we have APA. This is an energy stock. British Petroleum just announced a $6.7 billion loss today. I would stay away from energy a little bit. Not too crazy about that. PayPal. There's your earnings after the close. Look at this stock continue to grind higher. I love this breakout right here to a new all-time high. I think this is another one that you can consider for selling out of the money bullish put spreads. And how would you approach this? You'd click on that low right there. That's your upward sloping trend line. Click on that right there. Now you've got another line of support. You also have this breakout right here. You can sell a bullish put spread somewhere around the 175 strike and lower. I like it. I think that one could work as well. Qualcomm has been really nice. Long-term breakout. Compression, massive volume, breakout, long candles closing on their high. I think Qualcomm wants to continue to move higher. They just settled a lawsuit with Huawei, and that turned out well for them. So that looks good. I shouldn't speak out of terms. I think it was with Huawei. Anyway, Qualcomm just won a big lawsuit. RIG, that's another energy stock. Tupperware, I would avoid. You don't want to see a long green candle like this given up that easily. There's a long red candle. Now it's testing that horizontal support. You need to see if this is going to hold longer term before you can do anything here. But that's a pretty nice breakout right there. Big gap in there. So wait for support in here. But if we get through another week or so and we have any kind of market selling and that support holds, then you know that the stock wants to go higher and you can consider selling some out of the money bullish put spreads on that. Apple, gangbuster. Look at that breakout. And instant follow through even after a big gap up. The stock also wants to go. Big volume. PG, beautiful little breakout here to a new relative high. There's your earnings gap continuing to move higher. UPS, breakout, continuing to move higher. Looks great. There's another big breakout, PINS. And I think I missed MRK in here. MRK, I'd like to see it through this horizontal resistance level. If it can get through that, then you've got a nice trade below that 200-day moving average. You can use that to lean on for your bullish put spread. That's how we do it. Now, for intraday trading, we do look at the 1OP indicator, and you can see early in the day it was on the rise, rise, rise. So this dip was a buy in here. Sorry about this bullish explosion we're getting, or bearish explosion. We're getting this same symbol coming up. Those are excellent bearish explosions. And this one happens to be on PRPL, purple. You can see we're currently forming a bearish engulfing pattern right here. And, ooh, that is a pretty big drop on big volume. This one could be worth watching for us in the chat room. We may be day trading that on the short side. But in any event, what we wait for is we wait for moments like this where we had a big bearish crossover. That was right about in here. There was a tiny little dip, and then the market rallied right back up. Since then, we've had this indicator pulling back and pulling back and pulling back with the market compressing. So what? What does that tell us? Well, normally when this indicator is pulling back like this, the market will also be pulling back. When I see a move like this, it tells me that this is a bullish divergence. So we would normally expect to see the market pulling back when we have this type of action. I believe that the market is coiling and this resistance level is going to be challenged this afternoon, and we're going to have a breakout to a new high today. So you would want to be lining up all your really bullish stocks. You'd be wanting to watch them, and you'd be wanting to buy them right now on a dip, on the notion that when this finally does bottom out and it reverses upward, then we have a chance to blow through that high of the day. And you already being in stocks with relative strength, they would be the first to participate in that rally. So we're day trading. We're watching carefully to see if there's any late day selling. For right now, the market's continuing to float higher. We'll see how things play out. We've got some economic numbers coming out this week. I think that the air is going to get let out of the balloon. We had all the big tech companies announced last week. The back half of earnings season tends to be much softer in terms of results. All that enthusiasm that's built up with the Apples and Amazons of the world starts to wane very quickly, and profit takers get a little bit more aggressive. They don't want to be selling stock before those mega cap tech earnings. Getting a lot of bullish explosion alerts. All you need is a couple of these and it'll make your whole year. I mean, you could pay for an entire year of option stalker with these bullish explosions, but I'll save that for another video. I've given you some really nice stocks to take a look at. All of these candidates actually have some really nice promise to them. So Nokia set up well, AMD, FEYE, PYPL, Qualcomm, those were all really nice looking stocks. If you like this content, please give it a thumbs up. Leave some comments. Let me know if you like it or what I need to do to improve it, and I will reply. Also, make sure that you subscribe to the YouTube channel and turn on your notifications so that you never miss any of these videos, because I know I'll have really good trade ideas in each and every one of them. Thank you. We'll see you tomorrow. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.